Welcome to the channel. Today's date is February 11th, 2025. And what we're going to go over today is how we put on a strangle and make anywhere between $200 and $1,000 a day. Let's get straight into it. Today we're going to be talking about how you put on a strangle. And a strangle is just putting an option on both sides. You can sell, you can buy to open an option or on both sides, or you can sell to open an option. And we like to sell to open an option. So we're going to first go over how to execute the trade, not showing charts or anything like that. We're going to actually do it in a Charles Schwab account. And then we're going to go over what you'll be looking for to what makes a good strangle. So today we're going to be doing one on QQQ. We like QQQ and SPY because they have daily options. A lot of the other stocks out there, they have weekly options where they expire on Friday, but we like to use the daily because we know it's going to close that day. So what we're going to do is we're going to be in Charles Schwab. We're going to come here. We're going to hit Strangle. And as you can see from here, it has the buy to open. And what we're going to do is we're going to do sell to call. And you'll notice that both of them will change depending on, how much money you got in your account and how much risk you're willing to take. You're going to put how many options that you're willing to sell. And we like to sell at this time, we like to sell 15. And then we're going to come over here. You can see here, February 11th, that they do expire today. And you can see that has the call and it has the put. So we're going to come out and we're going to go to a strike price that we don't believe that the market is going to reach today. So we're going to put in the 535 to see how much they're paying. Right now, they're bidding 3 cents, asking 4 cents. That we think that's kind of low. That's not really making enough money. But we do want to get as far out as we possibly can to make enough money. And as you can see from here, the calls are selling a lot lower than the put. So that means I think traders believe that there's a lot more risk to the downside, which allows us to go a little bit further out. So with this trade right now, we have the 534 strike and we have the 520 strike. And as you can see from the bottom down here, the Dow is up 85, the Nasdaq is up 39, which is what the QQQ is, and the S&P is 11. So it's a pretty flat market, which is actually a good opportunity to sell a strangle. So on here, and a lot of this is how much risk you're willing to take. You can make, as of right now, and on this trade right now at 15, we will be making about $225. Depending on, like I said, depending on how much risk you want to take is how much money you can make. If you go closer, let's say if you wanted to go closer on both sides, which is not our preference, we like to be kind of far out. So with this one, if you wanted to, having the 532 and then the 523, you can make $720. As I said, you can make between $200 and $1,000. And a lot of it's going to be depend on how many options you want to sell and how close you want to sell. But our goal is not to get a sign, which we will cover right after we complete this trade. So we're going to put it back to something that we are a little bit more comfortable with. We're not going to make as much money, but we a little bit more comfortable with that option. And so, as you can see, the market is starting to come down a little bit. We like to monitor and watch it. If the market does come down, this put should start paying a little bit more, which will allow us to go a little bit further out. As I said in this video, you can see that the puts, it let us go $8 away and still be paying 7 cents. But but on the upside, on the call side, the 534 is at 527. As I said, this is while we're doing the trade, we're going to cover the risk and the rewards to the trade right after we actually execute the trade. So as of right now, as you can see, since it's coming down, it's allowing us to making us come a little bit closer. But we believe that the market is probably going to end up down a little bit today. So that's why we're watching. But we're going to pause here for a minute so we can watch the market for a second. We kind of like this trade right here. We have the 534 and we have the 520 put. And the market right now is at 527. It's a little bit closer on the upside than what we like, but we believe that there's more risk to the downside than it is to the upside, and we're able to sell the 520 strike. And we're going to go ahead and put in the $14 that they're asking, 14 cents that they're asking for, and see with this trade we will get $210. Let's review the trade. So what we're going to do is we're going to go ahead and execute this trade. After commissions, we'll get 100. Executed the trade and the trade went through, but we're going to go back and go over some of the risks and rewards to this trade. QQQ again, we're going to put on a strangle now that we know we already executed the trade. So the risk and reward to this trade is the market is at 527.90. We want the market to stay within a range, and we get to actually keep that premium. We get to keep that premium for the day. So we're going to go back to a call at a 534. At 533, and we're going to put the put at 520. So what happens in this trade and what occurs and what you can do during this trade as you monitor your trade, since you already have it placed. So what we're saying is we believe that on the call side, on the upside, we don't believe that the market is going to go over 533, and we don't believe that the market is going to go below 520 as it displays on this trade. Now, what can happen throughout the day, let's say the market does start to go in one direction. Right now we made some videos on rolling out. You can go back and watch those videos, but basically what rolling out or rolling down is, because these are daily options, if it did come close to 520 to where you're a little bit uncomfortable, what you can do is you can come here and you can actually roll out your option. This is a display on how to roll out an option. You'll see that we have the February 11th, that which is what we showed today, the 534, and we say, let's say it gets close to 534 and we're a little uncomfortable. Let's say it's at 530, 532, and we're a little uncomfortable, because what can happen is if it goes above 534, you can actually be assigned those shares. So you got to remember that with 15 options, that represents, each option represents 100 shares. So that's 1,500 shares. So if you were assigned, you would be assigned 1,500 shares of the QQQ at 528. And if you don't have that type of money in your account, you could do two things. You can either, and you don't want to be assigned, you can either close it, just to close it at that price, and you probably take a loss for the day, or you can be willing to roll out that strike. So we're going to display how you roll out. You'll notice that the 534 is selling a lot more. So it came close, and we decided that we was going to sell the 539 strike, and that's a 6 cents difference. So we could be rolling out to the next day, and we would still make, with this trade right here, we wouldn't roll out now with it being at 528, but if it was closer and the numbers would be higher, we will go ahead and execute this rollout, which will allow us to go out till tomorrow at 539 and not be at 534. And it may be something that you may have to continue the next day. Now, if there's some really good news out there, it could blow through your 539. That's the risk that you take. But we believe that we think that it's going to stay within the range that we traded for today. But I would recommend that you do a lot more reading up on strangles, on rolling out, on selling options. If this is something that you're interested in, if you want to be a buyer options, if you want to be a seller options, it's all up to you and what you think. But we just wanted to cover what the trade we did today. Thank you for watching. If you like this video, please share, please like. Good luck trading.